If you own an S corporation and your taxable income for 2025 lands between $250,000 and $1 million, you have got about 10 weeks left to lock in some of the smartest moves you can make before December 31st. This video is your step-by-step roadmap to protect your profit, trim your tax bill, and set your business up for a smoother 2026. Before we dive in, here's how today's video is structured so you can follow along easily. We'll go through 5 major points. Part 1, finding your reasonable salary and running a December bonus true-up. Step 2, processing your accountable plan reimbursement before year end. Part 3, manage distribution and protecting your shareholder basis. Part 4, using Section 179 and bonus depreciation under 2025 law. Part 5, a year-end checklist and extra bonus tips you can apply right away. By the end, you will know exactly what to do this week and what to do before December 31st and what to avoid so you don't end up paying unnecessary tax or facing an audit later. Let's start with part 1, your salary and the December bonus true-up. Most S-Corp owners miss this one. Your salary isn't just a paycheck. It's a balancing act between compliance and tax strategy. The IRS requires reasonable compensation, meaning that you pay someone else to do your job. Too low, and the IRS can reclassify distribution as wages. Too high, and you lose out on the qualified business income deduction under Section 1998. So, how do you find that sweet spot? Let's walk through this like we would with a real client. So, for example, let's meet Khalil, who runs a digital marketing firm in Honolulu. His S-Corp profit for 2025 is projected at $420K. He had been paying himself $118K in wages. We compared his role to industry data and found the right range is about $135 to $150K. Here's the step-by-step process we use, and we can copy this exactly. 1. Write down the main roles you perform, like sales, client work, management, admin. 2. Estimate your time split between each. 3. Use salary databases like the Bureau of Labor Statistics or a pay scale to find comparable wages for the roles. 4. Average it out and document your reasoning. Now, you got a written reasonable comp memo. If you are under that range, you can fix it before year end. The way to do that is with a December bonus. Add that adjustment to your final payroll. It's fully deductible in 2025 and lock in your compliance. Here's the key. The payroll has to be run before December 31st. Once the year's close, it's too late. Now, if you are watching this and thinking, I've already paid myself too much, don't worry, you can balance that out next year. But the important thing is to project your year-end total right now so you don't overshoot or undershoot. If you need a ready-to-use salary memo and compensation tracker, grab our template at Pro Deduction on Etsy or visit accesswideinstitute.com and it will save you hours. Now that we have nailed down salary, let's move to part 2, which is accountable plan reimbursement. This is where S-Corp owners leave thousands of dollars on the table. The accountable plan is how you get tax-free reimbursement for business expenses you pay personally. Use like your home office, internet, cell phone, mileage, and even office supplies. Here's why it matters. If you don't reimburse yourself by December 31st, you lose the deduction for the year. They can't be claimed later on your personal return because as an S-Corp owner, you are technically an employee. Let me share another story. Harper created a design studio in Austin. Harper and her partner were paying for home office utility and supplies personally, but never processed reimbursement. In December, we helped them fix that. First, you need to adopt a written accountable plan. It'll be 2 pages, pretty simple. 2, gather receipt and calculate their home office percentage. 3. Total the year internet, cell phone, and mileage expenses. 4th, issue a reimbursement check from the corporate account before year end. That reimbursement reduced corporate profit and saved them roughly $3,000 in payroll and state tax combined. So here's how you do it right now. You can create a written accountable plan policy. You can use our template, prepare an expense report with receipts, total home office expenses, and calculate the percentage of business use. Update your mileage log through December 31st. Cut the reimbursement check before December 31st also. Label that check owner expense reimbursement accountable plan in your accounting software. If you are on a cash basis accounting, the check date is everything. It has to clear before year end to count for 2025. And remember, the 2025 IRS mileage rate is 7 cents per mile, so make sure your mileage log is accurate. Let's move into step 3, distribution and shareholder basis. This is where many owners strip up, taking distribution without checking basis first. Here's a quick refresher. Distribution are the way you take profit out of your S-Corp beyond your salary. They are not subject to payroll tax, which is great, but they reduce your stock basis. If you take out more than your basis, that excess can be taxable as capital gain. Let's look at Sun Canyon Builder, a contractor in Phoenix. In 2025, the owner took $180K in distribution while running lean on wages. When we reviewed his basic worksheet, we saw he was about to go negative by 20 grand, which could have caused a taxable gain. We stepped in and reclassified part of the cash taken out earlier in the year as shareholder loan with a written note. Increase year-end wages by 10K to bring compensation in line. Pause further distribution until the final profit number came in. That small adjustment prevented a potential $4,000 capital gains hit and clean up his book for the 2025 return. Here's the action plan for you. You want to run your basis worksheet now, like beginning basis plus income minus losses minus distribution. If you are close to zero, pause new draws until you finalize 2025. If you have shareholder loans, make sure they are properly documented and prepaid through the book. This step keeps you compliant and protects against IRS reclassification if they view your S-Corp distribution history. Alright, let's get to part 4, which is section 179 and bonus depreciation, our 2025 update. This is where the big beautiful tax bill of 2025 gave you some powerful new tools. As of the law signed in July 2025, 100% bonus depreciation is back for qualified property placed in service after January 20th, 2025. Section 179 expenses is also expanded to $2.5 million with the phase out starting at $4 million. What's does that all mean? If you buy business equipment, furniture, or a qualifying vehicle and place it in service by December 31st, you can generally write off the full cost this year. Let's look at an example. Shoreline Media, a creative firm in San Diego, had $480K in projected profit. In mid-December, they purchased a heavy SUV over 6,000 pounds for production shoots and placed it in service in the same week. It coordinated the insurance, mileage log, and business use policy immediately. They also purchased a new camera gear under the de minimis safe harbor, keeping each item under $2,500. Here's the step-by-step. First, we want to identify which equipment was essential for 2025 operation. Second, verify the business use percentage of each item. Third, decided which asset to expand under Section 179 and which to depreciate under bonus. Fourth, place everything in service before December 31st, meaning it's ready and available for business use. Fifth, keep receipt, BIN, insurance, and mileage logs their documentation. That strategy cut their taxable income by 75K and save roughly 15K in combined taxes. Here are a pro move. If your state doesn't allow federal bonus depreciation, you can elect Section 179 federal item and use bonus for federal only. Always check state conformity. And if you want to keep income smoother for next year, you can elect out a bonus for some asset class. This is where working with your CPA or using a planning template from accesswelleinstitute.com make a huge difference. You have made it this far. We're on part 5, the 2025 S-Corp year and checklist and bonus tips. Let's summarize everything into a practical to-do list so you can complete this week. Here's the year-end checklist. 1. Salary check. You want to review 2025 year-to-date payroll, confirm reasonable compensation, and schedule a December bonus if needed. 2. Reimbursement. Process your accountable plan reimbursement and issue check by December 31st. 3. Distribution. Verify your stock basis before taking year-end draw. 4. Equipment. Buy and place in service qualifying property or vehicle by December 31st. 5. Projection. Run a quick year-end projection to measure tax savings and plan estimated payments. Some bonus tips for your income range. You can use your W-2 wages strategically to optimize your Section 1998 deduction. You can include your S-Corp health insurance on your W-2 to unlock the self-employed health insurance deduction. You can review retirement plan deferral like solo 401k setup and employee deferral must be placed before December 31st. You can use the de minimis safe harbor up to $2,500 per invoice per item to expand smaller purchases cleanly. You can maintain a capitalization policy, vehicle policy, and reimbursement plan. These written documents protect deduction in audit. Let's quickly recap how these strategies played out for real estate owner this year. Let's look at Khalil in Honolulu saved over 10K in taxes by adjusting his December payroll bonus and documenting reasonable comp. Harper Creative in Austin reimbursed 15K under their new accountable plan, cutting their corporate tax bill by nearly $3,000. Sun Kayan Builders in Phoenix avoided capital gain issues by correcting distributions and maintaining a clean basis. Shoreline Media in San Diego expand a 5K SUP and camera gear for 15K in total savings. These are real practical moves S-Corp owners are using right now in 2025 to control taxes legally and proactively. If you have made it to the end, you are ahead of most business owners who wait until tax season to think about this stuff. You have a window, just a few weeks to act. Go to accesswelleinstitute.com to watch more tax planning video and download your S-Corp year-end toolkit. Visit ProDeduction on Etsy to get ready-to-use templates for your accountable plan, reimbursement tracker, and salary memo. Remember, your S-Corp is one of the most powerful tools you have in building long-term wealth, but it only works when you manage it intentionally before the clocks run out. So take action now, adjust your salary, process your reimbursement, play your asset in service, and go into 2026 with peace of mind knowing you squeeze every smart move out of 2025.